Hello, crypto enthusiasts, and welcome to FinShark Updates, where the crypto news and updates are brought to you. Investors have a good idea that cryptocurrencies are a lousy hedge against inflation. Nor has crypto proved to be a haven in stock market tumult, central bank tightening, war and energy crisis, a food crisis, global supply chain snarls, or a pandemic. The cryptocurrency market lost almost $2 trillion in value, forces a difficult question. Could crypto trigger a broader economic slowdown? Will cryptocurrencies' current tanking push an already battered domestic economy into dire straits? Cryptocurrency crash. Economy killer or just another roller coaster moment? The US economy is still under siege as record high inflation, rising interest rates, and international turmoil drive up the cost of necessities such as groceries, gas, and even housing. Amid the broader turmoil, the crypto market that was riding high last year and worth over $3 trillion has tumbled dramatically, losing nearly 60% of its value and putting about half of all digital currency investors underwater. While there are plenty of reasons for pessimism around the crypto industry and some of the more mainstream stock and bond markets, experts say they still don't see any signs of contagion from the cryptocurrency dip that could affect the US economy. An economist at the University of Toronto, Joshua Gans, believes that most banks and other financial institutions have negligible exposure to crypto price fluctuations, having only recently begun to dabble in it with new crypto-focused offices and regulations. Cryptocurrency is not quite there as a collateralized thing, Gans said. Could one of these banks have done something foolish? Sure, but it doesn't look likely. They all have their crypto divisions, but betting the bank on it? I don't think they have, he added. Even if a bank has taken on too much crypto risk, one silly bank we can handle. What does it mean for the average American? The US households own about one-third of the global crypto market, of about $423 billion as of last week, according to the rough estimates by analysts at Goldman Sachs based on various surveys. The bank's analysts wrote that the recent decline in the crypto market is minimal relative to US households' assets, which stood at $150 trillion in late 2021. Cryptocurrency holdings account for only 0.3% of US households' net worth. At the same time, the recent price drop of digital assets has reduced US household wealth by almost $300 billion, according to Goldman Sachs. Time to bail or buy the dip? According to research from Glassnode, a blockchain analytics firm, 60% of Bitcoin investments are profitable. The remaining 40% of assets sank below the water. More investments are in the red as Bitcoin's price has tanked even lower, hovering around $29,000 per token last week. Peter Smith, blockchain.com CEO, said this week that more pain is coming and more risk will be exposed. But in the end, it's a good thing for the overall decentralized economy. Smith said the lesson of the past few weeks should be back to the crypto equivalent of the traditional market investing concept, slowly building a position in an asset over time so all your money isn't exposed to any volatility. Crypto crash is unlikely to hurt the US economy. The bank said that the recent decline is minimal relative to US household net worth and therefore unlikely to have a significant impact. Goldman Sachs said that it's unlikely that the drop in crypto prices will hurt the US economy. In a research note, the New York City-based multinational said that the recent decline in crypto prices is minimal relative to US household net worth and unlikely to cause significant damage. The cryptosphere has tumbled massively this year. Bitcoin, the most prominent digital asset by market cap, is right now trading for $29,000, according to CoinMarketCap. That's 58% lower than its November 2021 all-time high of more than $68,000. And the market's downward trend has accelerated over the past 2 weeks because of the collapse of two major cryptocurrencies, Terra USD, that's UST, stablecoin, and its sister token, Luna. But researchers at the investment bank said that although billions of dollars of investors' cash have been lost and US households hold much crypto, there's no cause for concern. The note added that the impact on the US economy would be small because the labor force participation rate of younger men who mostly hold cryptocurrencies has already fully recovered to the pre-pandemic rate. When considering the real impact of the crypto pullback on the US economy, a major caveat is that citizens of other countries hold a large share of crypto wealth. The note also added, after Terra and Luna crashed, regulators counted the cost of crypto. The implosion of the algorithmic stablecoin Terra USD and its sister Luna token sent shockwaves through the cryptosphere, crashing prices and roiling the entire ecosystem behind the coins. Luna's market value dropped to about $840 million from more than $20 billion before the Terra USD collapse, according to data from CoinGecko. Since crashing from its peg, USD has lost roughly $17.5 billion in value. As the cryptocurrency winter deepens this month, one wealth-destroying event, the Luna and Terra USD collapse, has dropped the human cost of unstable cryptocurrency projects to the surface. USD, a so-called stablecoin, plummeted over the last week as it lost its peg against the US dollar and sent its sister coin Luna crashing to zero, wiping more than $45 billion of the savings of untold numbers of investors overnight. Do Kwon Hyung is a South Korean cryptocurrency developer, co-founder and CEO of Singapore-based Terraform Labs. Kwon tweeted last week that he was heartbroken about the pain his invention had brought crypto investors and that neither he nor the companies had sold USD or Luna to profit from the crash. The statements came after the founder had proposed a revival plan to restart the ownership and distribute ownership of the project with 1 billion new tokens issued to holders of the collapsed cryptocurrency. Do Kwon and the Luna Foundation Guard did not respond to requests for comments before the publication. The crash comes amid a rethink of the regulatory approach to digital assets. US response could set a precedent as poorly managed projects, social and economic costs come into sharper focus. 3 ways the crypto crash could hit politics. As the value of cryptocurrency reached new highs in recent years, so did the political energy of its backers. However, now that the market has crashed, this is the first election cycle in which crypto backers have been throwing their weight around in politics as activists, voters, and donors. So what will the political fallout be? Where does the political energy go? 3 places to look. Number 1, lobbying. On the influence side, by injecting urgency into the policymaking process, the collapse of the stablecoin Terra will make crypto lobbyists even busier. One sign that influence efforts are still going full steam ahead is the Blockchain Association, an industry lobbying group, is still adding new members, with DeFi firm Chia Network announcing its membership last week. Number 2, ground-level politics. This is a valid crucial card. Even before the Terra crash, the dramatic twists and turns in the crypto world are causing mental health problems for some investors. Fans of Terra and Luna had nicknamed themselves lunatics, a sign of the mania taking hold in the corner of the cryptoverse. Recently, things have taken a darker side with some investors who lost all their life savings on Luna. Number 3, campaign funding. Sam Bankman-Fried, the billionaire founder of FTX, the crypto exchange, dumped about $10 million into Tuesday's Democratic primary in Oregon's 6th congressional district. It was not sufficient to elect Carrick Flynn, who shares his belief in effective altruism, a helpful approach to charity. The $1 trillion crypto collapse is crippling digital coin bulls. Investors have a good idea that cryptocurrencies are a lousy hedge against inflation, nor has crypto proven to be a haven in stock market tumult. Central bank tightening, war and energy crisis, a food crisis, global supply chain snarls of a pandemic. The rampant sell-off in 2022 has knocked $1 trillion off the combined market capitalization of the world's cryptocurrencies. Goldman Sachs calculates falling further and faster than most other risk assets, namely equities. Bitcoin, the king of crypto, is down nearly 37% year-to-date. Ethereum's Ether is doing even worse. It's almost 50% over the same period. The carnage in smaller altcoins is even more acute. And there are serious alarm bells about stablecoins, not pictured in the chart below, following the collapse this month of Terra USD. Goldman's chief economist Jan Hatzius and his team say that America's crypto hodlers have lost about $300 billion in the massive crypto collapse of the past 6 months. That may sound like a considerable number, but it makes up a tiny portion. Goldman calculates it as 0.3% of America's household wealth. Any incremental impact from the recent declines in cryptocurrency prices will likely be modest, Hatzius writes. Thank you for taking the time to watch this video. Don't forget to smash the like button and subscribe for more crypto, Web3, NFT, and finance videos.